Do you expect them to have similarly dramatic moves, or is there a major rotation that you're expecting?
Well, John, we've already witnessed this happen in large caps. NVIDIA's risen 40% in 8 trading days. So when someone says the Russell 2000, which is made up of even cheaper companies, can't rise 40% in the next 5 months, they're forgetting that we've already seen huge moves in the mega caps. I don't think the mega caps have to go down.
Do you expect it to happen in isolation with the small caps is what I'm getting? I know that NVIDIA's done that. Some other stocks have done that themselves. But if you're talking about all of the small, the small caps as an index moving up that much, what do these other things do?
Well, I think that a 40% move in small caps doesn't mean the rest of the market goes down. I just think that's going to highlight that the market is broadening, which is something we all expect, but it's also basically doing a risk-reward analysis, which is, look, I think if you can get 18% earnings growth and pay 10 times earnings, perhaps that's a good risk-reward. And I think money that's on the sidelines or people who've been thinking bonds are going to be, and cash is a place you want to stick for the next 5 years, but if the Fed starts cutting, they're going to look for places where there's good risk reward, and I think that's small caps. Do
you need dramatic cuts for that thesis to pan out, or are there other potholes in the road that you see that threaten your thesis?
Well, a recession would be negative. I don't think the Fed has to make major cuts. It actually just has to. I think the market narrative that would be the best for small caps is the belief that real interest rates are too tight now. 5.5% versus inflation trending towards 2%, and getting rates back down to a neutral rate of 3%. If the market believes that, they don't need the cuts to be front-end loaded, but they have to believe we're going back towards neutral. I think that'd be a huge catalyst for small caps.
Okay, now let me ask you about more about mega caps and about the consumer. How important, not necessarily just to small caps, but to the whole market narrative, will NVIDIA earnings next week be?
Well, NVIDIA is really important because it's underpinning really what is driving the U.S. economy, which is a real push towards productivity, using basically digital tools and automation. That's a very important disinflationary trend. And of course, the U.S. companies, all of the big ones are all the U.S. I mean, it's a global phenomenon that benefits U.S. companies. So I think it's incredibly important. But NVIDIA, trading at 26 times forward earnings isn't that demanding a stock either. So it's not like I would say sell NVIDIA to buy small caps. I think NVIDIA is still a long-term buy.
Now, what about the holiday season and the consumer who's very stretched, particularly the working class consumer? What kinds of numbers perhaps did you expect to see at the beginning of that season? Oftentimes that can set the tone for how retail stocks and some other things perform.
Yeah, the consumer is under stress. I mean, it's known that things that are high interest rate, like credit card, auto loans, HELOCs, adjustable rate mortgages, these are all subject to Fed policy. It's been a very penalty rate for consumers when inflation's coming down and they're paying these very high rates. So cutting rates would be a tailwind. Falling gasoline would be helpful as well. And I think the third is CEO confidence has been put on hold as long as the Fed's been tight. If the Fed starts to signal a rate cutting cycle, I think businesses will start to be more expansionary, and that's good for consumers as well.
It's like the stock market equivalent of spotting a unicorn riding a comet. Nvidia has done it again. The tech giant's stocks are on a spectacular climb for the 5th consecutive day, spurred by exciting news surrounding its cutting-edge Blackwell platform. And it's not just Wall Street that's buzzing. Companies like Foxconn are joining the fray by building Taiwan's largest ever supercomputer on this groundbreaking platform. But wait, there's more. Imagine the potential of the world's largest manufacturing facility dedicated to NVIDIA's GB200 superchips cropping up in Mexico, with NVIDIA's AI summit in full swing and its stock showing a serious uptick of 4.1% at the market close. It seems like the dawn of a new industrial revolution. Is this a mere market bubble or an electrifying prelude to what's set to redefine tech? We have to dig deeper into the story that's making financial circles jittery with excitement. Welcome back, everyone, to Investocracy.
He joins us now, Trivariate Research, the founder and CEO, also a CNBC contributor. welcome back.
Great to be here.
What is your current read on the market and what's been a really noisy week or so?
I mean, Jensen is in New York today telling all the institutional investors that there will be return on investment for NVIDIA and calming people down a little bit. Because when I do my meetings in this last week, I'd say 3 or 4 times it comes up, hey, I think one of the biggest investment controversies is what will the return on all the capital spending be for the hyperscalers? And so you get the CEO of NVIDIA in town saying, calm down, and I don't know if guys went out and bought more or whatever, but that stock acts well.
They actually did.
Yeah.
I mean, they're buying more. It's up 4%.
He's meeting all the big investors. He comes around regularly. He's doing his normal kind of Boston, New York trip, but I think he knows that one of the biggest 5 or 10 investment controversies across the whole stock market is, will companies see a return on that? And then the answer he's telling you is, yeah. I mean, after lunch meeting I went and looked at the healthcare stuff on NVIDIA's website just to get excited about some of the applications there. So for sure, I think that debate. People know that the quarter is going to be fine. It's not for quite a while, but that maybe they feel a little better about that debate than they did before he went around and came to town.
Do you feel a little better about this trade then? The overall mega cap tech trade. Now this is back above $3 trillion in market cap.
I still think that two things. There's 2 currents there. One, I think semis you want to be overweight for 1, 2, 3, and 5 years. Okay, I like the trade. I don't think I'm smart enough to know exactly what's 3 weeks. It pulls back 20, 30%. But NVIDIA was at 14. It went to 140. I wasn't smart enough to sell it down to 100. I'm not smart enough to. It's a long.
Okay, so you say
in the whole complex.
Then don't pay attention to the price action really in that space.
I don't think so. What I think happens with growth investing is only when you get in the top decile, the most expensive 10% on enterprise value to forecasted sales, then you get in that alarm area. But as you know, a lot of the semi companies' revenue is up a lot and their estimates are up a lot, and so the valuation isn't crazy for a lot of these names.
I had Rick.
NVIDIA's ascent in the stock market feels like watching a rocket launcher, and everyone's asking, can it climb higher without burning out? It's an apt analogy when discussing a company that's quite literally fueling the fires of AI innovation. Recently, NVIDIA's vice president Bob Pett likened the company's position to the dawn of a new industrial revolution. Meanwhile, Wall Street isn't just along for the ride. It's hefting NVIDIA's prospects with bullish support, akin to a proud parent at a school science fair. You see, NVIDIA's Blackwell platform isn't your run-of-the-mill tech advancement. Think of it more like strapping a jet engine to an old-school bicycle. Successful bid submissions from NVIDIA have seen the company's valuation creep up to a staggering $3,260 billion. But why stop there? Foxconn, a heavy hitter in the manufacturing world, is on track to assist NVIDIA in launching Taiwan's greatest supercomputer ever. Coupled with a $6.6 billion funding round, this ensures a commendable supply of cutting-edge chips to evade geopolitical tensions in the region. But before we go any further, if you want to keep up with NVIDIA's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates.
All right, a week went by. I was on vacation. Not a whole lot changed. We're still dealing with the 57 handle in the S&P 500, and I think the risk radar was a pretty darn good framework. I left with yellow lights across the board with the green on stocks. Now, S&Ps have still been range bound, but today's breakout in NVIDIA, technically not an all-time breakout, of course, but a big one on the chart, really builds that kind of perfect market that has shown up a few times this summer into the fall. And it's one of the most encouraging days when you've got stocks strong, NVIDIA leading, the AI trade, the market cap that needs to move forward to give us a leader and a hero in the market. That's all happening while bond yields have been inching forward and the crypto market struggles to take off. That tells me that we have investors finding quality, following high quality, and still reticent to go after the junky stuff. That to me is the healthy market. That's what you want. You want yields up. That's what I've been talking about. The relationship that has been so core. It was late September, right around the Fed decision, that it took the green light off bonds and made it yellow because of the potential for yields to bounce back as the Fed did a deep cut, which I argued would then lift the terminal rates because it should help the economy. And that's what we've seen. Now, NVIDIA, kind of its own world, and that's fine. The chart looks like a really nice breakout, targeting the all-time highs. Don't see why it wouldn't get there as long as there's not some big, surprise or black swan thing or some big short or whatever that we see from some of the other qualms that investors have had, like the super micro stuff. As long as there's no big shock for NVIDIA, it should be back to business as usual as the leader for the market. That's big. That's bullish. Even though it would be nice to have broad participation, there is the theory versus reality. And in reality, this market has been much stronger when it's concentrated in big tech. So that being said, the economic situation and the way it impacts stocks should be positive right now unless inflation starts to come in warm. As you see some of the Russell and some of the value trades lagging today because we priced down the odds of deeper Fed cuts, that's okay for now. That's a good trade-off. What you don't want to get is if we start worrying about reflation and a resurgence in inflation and core prices, but with crude oil still continually getting rejected, I don't think you got to worry about that yet. Look at bonds also. This is important too. The way they relate to the S&P 500. You've got the S&P range, which really is kind of neutral, but the bonds are not. The bonds have been in a clear trend. You had the steepener around the Fed's cuts, which at first looked like the market was telling us they're necessary cuts. They're needed. They're traditional bull steepener cuts when the economy slows, and that's not good. But then it turned into the bear steepener. And that's part of the perfect market that I've talked about before. Now you're getting some of the inversion of the curve as we get the 10s and the 2s compressing again because the market saw good data from jobs, and so they are pricing out deep cuts from the Fed. I still think that's a good trade-off. The way the 10-year has been moving is not alarming yet, so I'm going to keep the yellow light on. Now it will go red if the 10-year really starts jamming and gets above something pretty far away from here though, like 4.2 I think. If you get the 10-year above 4.2, then the light for bonds goes red again, and that might mean we're dealing with some reflation risk that the stock market doesn't like. But I think as long as we're slowly creeping up, even if we're doing it quickly because it's good data related, that is a positive thing for stocks. And as long as yields are range bound, the dollar should be range bound. Crypto and Bitcoin just still doesn't look impressive. The yellow light there, if BTC gets back down below 60, the red light goes back on. Crypto down, stocks up, yields up. That's the perfect market. It's what you want.
As they say in trading circles, Nvidia has more aces up its sleeves than a card shark at a Vegas casino. The demand for its groundbreaking GPUs has soared, fueling explosive quarterly reports marked by triple-digit growth figures. Jensen Huang, the CEO, describes the clamor for Nvidia's Blackwell AI architecture as insane. You could bet a crypto fortune that Nvidia's stocks have secured their spot as a must-watch on any serious investor's radar. However, investing isn't all sunshine and rainbows. At 62 times earnings, skeptics may raise eyebrows at Nvidia's valuation. It's worth noting, as some analysts do, that this is tempered against Nvidia's potential, forecasted to deliver $4.02 in earnings per share for the 2026 fiscal year. CJ Muse of Cantor Fitzgerald captures the prevailing sentiment well. Nvidia is the top pick and stands to gain the most upside. Yet, all of this begs another question. Is this stock walk on a tightrope headed toward a thrilling, circuitous success story or a nerve-wracking fall? If tweets and investor chatter are to be believed, the market's pulse is reflective of mounting excitement rather than caution. The Phoenix has indeed risen from a summer of hardship, a company whose stock bottomed amid cautious AI adoption, back to its current trajectory accompanied by a 29% rally. There's an electric charge around Nvidia's instant uptick, and if you're in the market, the phrase, buy low, sell high, might be doing laps around your mind right now. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
NVIDIA demonstrating its offerings beyond AI processors, the company providing greater insights into the company's various software platforms in its AI Summit in Washington, D.C. For more on this, we have Yahoo Finance's Dan Howley. Dan.
Yeah, Josh, they basically did a lot of talking, kind of laying out the background of NVIDIA, telling everybody there in D.C. for this summit. This is the first time they're holding this summit since 2019 in D.C. And so they wanted to kind of give the background of where NVIDIA came from and then really kind of point to the software offerings that they have and how well they're doing and how important they are to NVIDIA. And so, you know, we talk so much about the hardware itself, you know, the Blackwell chips, the different permutations of that and the Hopper chips and how demand is for both of those. But post-hardware explosion, NVIDIA seems to be setting itself up as a software company as well. So essentially saying, look, we're not just about chips. We know you all know us about
software,
us.
Networking, got it all.
Soup to nuts,
Right.
networking as well. Yeah, and I think, that's obviously an important kind of thread to the NVIDIA story, because the more people that start to use its software, well, they're not going to want to leave, right? They're going to want to stick with NVIDIA going forward. So, I built my AI service on NVIDIA's platforms. Well, I'm not going to go to AMD now. I'm not going to go to Intel. I'm going to stick with NVIDIA. And now, well, I need to upgrade my chips. I'll probably just go with NVIDIA, right? I don't want to have to, kind of go back to the drawing board. And so it's an important strategy for NVIDIA now, pointing this out. And so, they talk about how they're working with Carnegie Mellon University and the University of Pittsburgh on different learning facilities for things like robotics and automation. They brought up how they're working with the likes of AT&T and Accenture, kind of going over how these different companies are using NVIDIA's own software to enhance their AI capabilities. And so you imagine that if they're building, like I said, these different pieces of software, these services, or even testing them at this point with NVIDIA's software, they're going to continue to go back to NVIDIA as well, just because it wouldn't make sense to kind of, restart from the beginning without them.
So, how should one approach NVIDIA in this rapidly evolving landscape? If you're considering hitching a ride on what's quickly becoming an exhilarating investment express, you're certainly not alone. The NVIDIA narrative is tempting. With soaring stock prices and monumental projects across the globe, it resembles a heavyweight contender poised for consistent ring triumphs. Current forecasts don't just predict growth, they're virtual endorsements of NVIDIA's staying power and industry-shaping potential. As Wall Street latches onto NVIDIA with fervor, it appears the company's stock may continue to bask in the investor spotlight. Its gross margins, volumetric positioning, and sustained innovations render plenty of action items for investors. But enough about Wall Street. What are your thoughts on NVIDIA's stellar surge in the stock market? Does this signal a savvy investment in cutting-edge technology, or are we staring down the barrel of another tech bubble? We'd love to hear from you. Drop your thoughts in the comments below or tweet us your take. Your insights could light up this conversation like an LED bulb. And finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen.